Insurance bad faith is not as difficult a concept as the insurance companies want it to be. I always tell people that it's just insurance company malpractice. Just as you have medical malpractice, legal malpractice, insurance companies have standards and laws by which they're supposed to handle claims against their policyholders. And when they fail to do that and they cause damage to their policyholders, then we have to prove that they could have settled the case against their policyholder, they should have settled the case, and they didn't. And when we prove that, then the insurance company has to pay off whatever damage there is to their policyholder.
The types of insurance policies that are most affected by bad faith claims are typically any type of liability policy. In reality, an insurance company can be in bad faith for any type of insurance. But what we typically see are insurance companies that are not protecting its insureds that have caused damages or harm to others. Those are typically liability policies and third-party claims, where you have been injured by a third party and that third party's insurance company needs to protect him or her.
The typical rights the insurance policyholder has are defined by the insurance contract and by Florida law. So generally speaking, all a policyholder has to do under Florida law is pay their premiums on time, report the accident when it happens, and cooperate with the insurance company. That's all you have to do. The insurance company is supposed to take care of everything else. And when they don't, and when you get harmed by that, for example, if you have a $100,000 policy and the injured party goes to trial and gets $1 million against you, that's where we come in, because when we prove insurance bad faith, then the insurance company has to pay off the entire judgment against you.
If you purchase insurance and your claim is wrongfully denied, you should absolutely consult with an attorney that handles insurance bad faith claims. Because, again, insurance companies are obligated to abide by the insurance contract that you entered into with that insurance company. What that requires is when you provide the insurance company with notice of the loss, it needs to investigate that loss. And if the loss is covered, it needs to pay that loss. And it's not uncommon for insurance companies to try to allege that the loss is not covered. And if an insurance company decides it's not going to cover a loss that should have been covered, then the insurance company can be in bad faith for that as well.
We have a long track record of fighting against bad faith practices. Obviously, we're not going to tolerate that with our personal injury clients. We want to make sure that insurance companies are settling those cases when they could and they should. But a lot of times we get contacted by people who have not been protected by the insurance company when they have a claim against them. And the way we do that is to rely on existing Florida law, much of which we have helped create. And the insurance industry knows that they're not going to mess around with our clients. If they want to, then there's going to be a consequence to that.